Hi and welcome to the channel. Today we are going to analyze SHEL. First, we'll find out its dividend score, and after that we'll check the valuation with the help of fast graphs. A market cap of $190 billion, the current stock price is 52.54 and they operate in the oil and gas industry. During the last 10 years we can see that SHEL has gone both down and up and down and up again compared to your original investment. But if you held it for 10 years, you would actually sit with $12,651 right now. And that is, of course, a lot below what the S&P 500 would have got you. And this is with dividends reinvested. Now, some financial data. The sales the past 5 years is 2.3%. That's an X. The earnings per share the past 5 years has been 34.7%, so that's extremely strong. The analyst expects earnings per share the next 5 years to be about 7%. The threshold is 8% here, so that's an X. The return on capital has been 4.42%, and that is really weak, so that's also an X. But the debt compared to the free cash flow is okay at 2.21 years. Now some yield data. A nice dividend yield at 2.82%, and they are buying back a lot of shares. Last year they bought back 4.15% of all shares. The payout ratio is about 22%, and the growth rate of the dividend is actually negative. They cut the dividend during the disease when oil prices plummeted, so also growth years is 0 years. That makes up for a total score of 5 out of 10, so a bit mediocre. Let's check the valuation in fast graphs. Here we have SHEL in fast graphs, and of course it will be a lot of ups and a lot of downs. The earnings tends to follow the oil price, which is highly volatile. And we can see that during the recession 2008-2009, the earnings went down with almost 60%. After that went up again, and it's been going down. And during the disease, it's dropped 70%, but right now it's rising again. If we look during this 15-year period, the earnings growth is 0.86%. The S&P 500 earnings growth is about between 7 and 9% usually, so this has not been a great investment. If we also plot the price compared to the normal PE, which the company is trading at, which we can see on the right, which is 12.8, we can see that right now it seems to be a bit undervalued with expected earnings though. So if we project out to late 2024, we can expect a total annual rate of return of 43.9%. Of course, that is if the estimates of the earnings holds up. It's projected to increase a lot the next coming year. But of course, if it misses, the estimates are gonna go down. Please hit the like button and watch my latest video right here about 5 brand new stocks I bought for my portfolio. See you soon!